Why raising interest rates might not actually stop inflation. First, we're going to have to go into what is causing the inflation, because we hear all the time that all we need to do is a 1970 style Volcker, hiking rates till the death of inflation, because that is how it is. Well, what is different between now and the 1970s? In the 1970s, it was a monetary style inflation. The money supply was growing, therefore there was more dollars circulating in the system, therefore more dollars chasing the same goods and services, driving prices up, causing the inflation. It was the growth in the start of the Eurodollar system. Bank lending was skyrocketing, and it was a time of a very high growth and inflation. The difference between now is what's causing the inflation is not the money supply necessarily increasing, but the supply of goods actually decreasing. I know what you're saying, Josh. During the 2020s, the US printed 20% of its total dollar supply. M2, maybe. We had an increase on M2 onshore dollars, but in the global financial system, the total dollar supply didn't actually increase that much. If M2 money supply is this circle, the total dollar supply is many times greater than the M2 that we can actually track. So what's causing the inflation is not necessarily a total dollar supply increasing. Onshore, they may have increased and the local person may have more dollars to spend, but as aggregate total, we are not in a monetary style of inflation like Jeff Snyder would say, but we are having massive inflationary effects due to supply chain issues. Justin.
I think core to the problem is there's fundamentally not enough stuff that's being. First attack of this came from COVID. Supply chain got boofed. The second attack came from within. That's going after the commodity producer. Sure, we might be able to do factory farming and use industry to mass produce various goods or whatever. But if you don't have the input commodity, in order to do this, all the other technology crumbles and fails because the foundational, that is the commodities, the input commodities. And if you go back to the end of the 20s, beginning of the 30s, the problem there was the US, at least from the US perspective, is we had a tremendous industrial, and the industrial plant needed customers in order to buy the industrial plant's goods and services. Well, as Friedman notes, after World War I, that destroyed customers. And more importantly, if you destroy customers, yet you have an industrial plant that needs customers, and there's no customers there to buy the goods and services, you've got a problem. It creates a self-fulfilling doom loop. But the key is, back then, the problem was we had too many goods and services and not enough buyers. You could fix that in theory by putting more currency units into the economy, because that would create more buyers. Now we almost have kind of the opposite problem, in a sense, where we do not have enough goods and services, particularly goods to buy, yet we still have the same amount of currency units. And probably we're going to have a few more for other reasons keep coming in, but separate video right there. This is one of those problems that I don't know how stimulus or putting money directly into the hands of consumers will work, or at least work. If somebody says we just need to do what we did in the late 20s, early 30s of last century, okay, great. Well, we can do that, but I do not think we have the goods and services to back that up, which means that things will just get worse, or the prices will just exasperate.
How is raising interest rates actually going to stop a supply chain issue? How is raising rates to say 10% going to bring more food on the table? There may be less demand, but how much less demand? Food, energy are inelastic. We will need it no matter what to sustain our population, but you will see companies go bust. That is not to say we will not see massive deflationary effects from interest rates rising. There's so many zombie companies right now. A zombie company is just defined as a company who is reliant, their business is only sustainable because they have, because of these historically low interest rates, and they can continue to refinance their debt, sustaining their business. There's so many of them on the stock market in general that are only here today because of where interest rates are. So if interest rates are rising, these companies are going to start to go bust. There's going to be less jobs available, less services, less producers. It is going to be massive deflationary effects like we saw in 2008. Job losses, probably even wage cuts, where you're going to be making potentially less money. And the things that you don't need, like services, because money's going to be tight, will probably start to go down as well. But if you're going to the grocery store, going to the gas station, the prices are still going to be high because we're cutting off supply chains. You have to think about these secondary consequences before you do them. You don't understand at first glance how sanctioning Russia is potentially going to kill a massive amount of people due to famine. As Justin was talking about potash, Russia and Belarus together produce 40% of the potash. If you put China in that, it's around 50% of the potash of the world. Without potash, you can't have fertilizer. Without fertilizer, You can't have crops. Without crops, you can't feed the animals. There is a chance that there's potentially 50% less food available. And what's happening with Chinese lockdowns right now? China's locking down their entire economy. Therefore, they're not going to be producing any goods. Get less goods from China, less food, less energy, and the prices are going to skyrocket. Sure, in the US, we may survive because the dollar is so strong, but what about these other nations? We already see other countries coming out and saying, okay, I'm sorry, but we're going to need to slow down on the food. Or probably going to be food lines like we saw in the 70s. There'll probably be gas lines. There will probably be empty shelves. It will just get exacerbated. So this is kind of the worst of worst worlds, because we'll have, again, with raising rates, we'll have asset prices go down. So you'll see your 401ks, your wealth disintegrate, along with the prices of the necessities going up. This is just going to lead to a much lower standard of living for the average person. And this goes on to the cycles that we often talk about that Justin can give a lot more information on.
So for the prior large cycles that we've gone through, think fourth Friedman, generally they end with a financial crisis. They also open with a solution to that prior financial crisis. And so historically, the cycles are closed out by a financial crisis. Those are never fun to go through, but we seem to have to go through them. So I don't know what the future crisis on the horizon will be like, but it does seem gearing up that it's not going to be like the 30s, in the sense that we have a problem of we can't make enough stuff versus we have too much stuff to make. We have the 30s, but not enough customers to buy it. The other thing you've got, I guess, intersecting with this one is you have the concept of what does the world itself want to use? Well, outside the scope of this video, my suspicion is one of the crises, one of the big problems that has to be as the world's reserve currency anymore. And even if everyone is on board with that, still the transition that has to be made. But again, Josh, to your point, historically, these things have always ended in a crisis, a financial crisis.
So how will raising interest rates affect us? Because we will not see a decrease in these commodities unless we start to produce more and lift all these sanctions. But either way, this crop season is pretty much already at its peak. So I'm expecting that we'll have a pretty massive rise in food prices, especially next winter, along with energy prices. So commodities are probably a good bet, even though they've already gone up so much. I'm currently not buying them right now. There's really not a great way to prepare, because there's a very high chance that if you don't have a necessary job, I'm not saying now, I'm looking out into the 10 years out, that these Goldman Sachs analysts are not going to be in high demand. So people that are actually doing things, producing stuff, will probably be the highest, at least safest jobs at the moment. I really don't know how to make somebody feel good in these situations. I hope and pray that I'm wrong about everything, as I'm sure Justin does as well. But we are just looking at what we are seeing, and it is just sad to see that the consequences are going to be these mass famines. Hopefully not, but it just seems like we are setting up for a very dark, shorter term future. But that is not to say I think the future will be much better than we could even fathom.
I've got a much simpler take on all of this. If you want it, you got it. If you want to shoot yourself in the foot and martyr yourself over moral outrage because something makes you feel bad and you want to blow up a already strained supply chain, go for it. Someone I like to follow has a really good quip where it's, you can choose to ignore reality. You can't choose to ignore the consequences of it. My response to this is that the West has got to get over itself and realize that feelings are not paramount. And if we have to have a few lean months, hopefully not months, years, hopefully this little pain and suffering is, I think it boils down to this. It's hard to bounce back before you hit bottom, and I don't think the West has hit bottom yet. My hope is that we can hit bottom in a graceful way where we can perhaps realize some of the errors of our prior ways. We can have our come to Jesus moment and reform and move forward with much more of a focus on the empirical reality, even if it's an fact, if it makes us feel bad, than what I sense as a priority on trying to preserve people's feelings. But that's just mine.
Yeah, guys, so this is going to wrap up our grim video. This is not to say there won't be opportunities, though. During this time, if you are prepared, there can be incredible opportunities to set up the future with. So thank you very much for watching, and we will see you on the next one.